Hi, welcome to the Market Alert for Tuesday, the 1st of October 2019. So yesterday we see what could be a dead cat bounce or a resumption of the current bull market that we've had in Bitcoin since December of this year. Prices moving up 8% yesterday and climbing back over the 8,500 level. So let's have a look at this in a bit more detail. Grab the charts here. We'll start off in the bigger time frames. It's always good to step back, have a look, see where the market is trading in the bigger picture. We can see yesterday the market not trading down to the 74.35 area, but actually trading back up to the 200 bar moving average. Important level this, in turning the market back around and moving back to the upside. In the 4 hour, the market also we see finding support there at 77.36, and we see some buying coming into the market as well. We can see the green bar there and here, and also the buy signal. And we have some selling pressure here as prices move to the upside. No surprise really, because we've got resistance to the left where the last selling phase took place. Eventually this disappears, as we can see from these two low volume bars that follow for the next 8 hours, and then prices have moved higher once more with further buying stopping at the 50 bar moving average. So all very clear and predictable there in its current move. And then intraday yesterday we see a shakeout to the downside. The market still on the short side, to be treated with caution of course. We see the market move higher and retrace. So again, if we just get the retracement tool from this low to this high, the market stops at 76%. Good area, not signaled, but it's a good area for a speculative punt. And always keeping in mind that we are on the short side, or were on the short side in this time frame at this time. The market then drives higher with some buying, followed by further buying of a bit of selling here, before the market then drives through the 50 bar moving average and then finds resistance at the 200 bar moving average. And if you don't have the 200 bar on the chart, you're really missing a trick. And I'll show you something in the Dow in just a moment where this can be used in multiple time frames to accompany the time frame you're actually trading as well. So you can see there the market was sideways, and then we get the market driving through with some volume. And as we go through this resistance area here, you can see that we've got prices moving higher, but have a look at the volume. This is a fascinating bar, because with this sort of volume, if there was further selling, then prices would have move back to the downside, but they didn't. The selling disappeared, and then we see prices moving higher. But again, notice how you need more new buying to drive through resistance areas. And again, we've got that selling pressure that we saw in the 4 hour chart, which is where the volume is greater than the previous bar and the range is less. And then we see the profit taking coming into the market here, as prices are now back above the 20 bar moving average. Then move into the night session, and then early hours of this morning, we can see a convergence of price here at the 50 bar and the 20 still above the 50 and above the 200, so back on the long side, and we see prices moving to the upside there. Of course, the question is, will they reverse and come back and do a 76% retracement before ultimately going back up, or will they retest the low that we have in here as well? So it's a matter of taking a view, but the 15-minute is now back on the buy side. What I would be tempted to do is to wait for prices to come back to the 200 bar moving average, and then see what happens, and then take a view there for anything on the buy side. But a good bounce back yesterday for this market. Okay, in other markets, have a look at the stock markets, and yesterday we see safe havens beat stocks in Q3 as global policy uncertainty hits record highs. Whatever that means, I have no idea, but that was the main news for yesterday. As I said, there was no economic news yesterday to move the market, so it was a case of having to find their own news. And prices did move higher. It took a bit of a struggle, which we'll see in just a moment, but in the bigger picture, the market importantly finding support at the 76% retracement and is now heading up to this one at 27,127. So again, let's have a look at the detail. So in the pre-market session, we see prices closing below the 200 bar moving average. They did come back, but then went back and retested. Got a bit of a double bottom there, and then prices opened and drove through the 200 bar moving average, and this was followed by a couple of sell signals, but the market wouldn't go down. And again, the point of being repetitious, as I've said, they want this market on the upside. They'll do anything to bring it to the upside, and you can see here how they were doing this, and I'm going to show you something in a second, but I just want to mark up something here. You've got this low here to this high that's in place here, and we end up with the classic 76% retracement with the 20 bar closing above the 50 bar, and then prices starting to move higher. You've also got this to this bar here, also 76% at the 20 bar, and then sitting above the 200 as well. So we're now through the 200. Just look at the detail there. When you're watching this on a bar by bar basis, you can sit back, look, and just take a view of each bar that comes in, and all you have to do is say, where is the market trading in relation to the 200 bar? Because once it gets through this, it's likely to move to the upside in the Dow because of the powers that be wanting this market to be on the highs. So what I want to show you is this. If you go down to the 1 minute for the start of yesterday's trading session, you'll see why the market wasn't trading lower with regards to closing below the 200 MA in the 5 minute, is because it was finding support at this level inside of the 1 minute. Now, I've been watching this for a couple of months or more now, where prices have both charts open, and I watch to see where the 1 minute is trading, and if it's can't close above the below the 200, then it isn't going to close below in the 5 minute, and it allows you to actually get into the market a lot quicker. It fine tunes the trade as well. So I'll be doing more videos on this going forward. I did record 3 or 4 markets yesterday, or at least I thought I did, but when I came to check the video, I hadn't hit the record button, so I'll try again today. But it's fascinating to watch this. Once you start drilling down into the smaller time frames, you really start to see how you can reduce the risk and increase the prospect of far more profitable trades just by seeing what's going on. If you looked at this, you know it's not going down, but why isn't it going down? Go into a smaller time frame and you find exactly why it's not going down. And news today, what have we got? There's only one news item, ISM manufacturing PMI at 3 p.m. for the US. Again, the markets really aren't taking much notice of this, but keep it in mind as a high impact news item there. Meanwhile, in the implied volatility, this remains red as prices yesterday still closed below the 20 bar moving average with prices and above the average for the implied as well. So still prospect of a down move as far as the implied volatility is indicating here. The options traders are not convinced yet that any move to the upside is going to be supported. And to be honest with you, I don't know how many more rabbits they can pull out of the hat. That said, always keep in mind, first and foremost, they want the markets on the high, especially going into an election year next year. Shakeouts will come and go, as we've seen in this chart, which I discussed in the alert the other day, about all of these areas. Once they break, you'll get shakeouts. And these shakeouts and pullbacks are becoming more and more common. They never used to be. So that to me says that the market's struggling to maintain the highs. But again, it is still the better side at the moment. But trade what you see, that's the key. Understand where we are in the bigger picture, but keep in mind the intraday moves as well. Yield curve still inverted, 0.2 yesterday, or minus 0.2 for yesterday. So yeah, recession still on the cards for this. Deutsche Bank below the 200 bar moving average at the moment, and still playing around with the 20 as we see there. And then finally a quick look at the pound. This in no man's land yesterday, as Boris and co are missing in action, I think, aren't they, with their conference. And again, waiting to see what the next move is going to be from the Remainers. So the market treading water yesterday, as seen in the 15-minute chart. And again, prices making their way back to the 200 MA. As soon as it got there, it was sent back to the downside. Tried to come through again, sent back to the downside. And eventually it broke through, but not for long. And then once it got back through here, it was sent to the downside. So the pound, looking just at the 15-minute chart alone, is telling me it's struggling at the moment with the 200 MA. So given this is the current price at the moment, if it gets to the 200, I want to see it close through convincingly before considering a long. I wanted to come back and test it and then go to the long side there. And the averages also indicating short side as well. So on that basis, watch for prices to go through, come back, and then maybe move to the downside as well. But everything will be coordinated around the 200 MA. I mean, I've covered this long enough now in this in the market alert for you to actually see that it's an incredibly powerful tool. It's like a magnet. It's either drawn to it or thrown away from it. But eventually it comes back to it. And there are ways of determining that as well, which when I get 5 minutes, I will try and put into other videos. But fascinating to watch, especially in the multiple time frames, as you've just seen with the Dow. You can do this with any of them. It's quite stunning once you split the markets down into the smaller components and drill down. You can see what's going on completely. Great stuff. Okay, that will do it for this one. If there is anything else to report, I will let you know. But no news today. See what happens. As far as the markets making their own direction, could be a quiet one. We'll see. Thanks for watching. See you in the next one.